Inflation is here. Or at the very least, the inflation report is here. So let's cover the latest inflation data, both the CPI, the Consumer Price Index, and the core inflation data, and how this may affect the economy and your investments and your buying power in this country. So real quick, what is the CPI? Just to cover this, the CPI represents a basket of goods and services that the average American purchases in order to live their day-to-day life. And they measure the current prices of this basket of goods to prices in the past to see where the economy is headed, to see where prices are headed, to see if things are getting more expensive over time, which they do get more expensive over time, but how quickly are they getting more and more expensive? Are things getting out of control? So how this works is the BLS sends thousands of surveys to stores and individuals to cities across the country to see on average where prices are headed. And then core inflation is a piece of CPI that just doesn't include energy or food prices because those tend to be the most volatile, and the volatility in those two areas can really swing inflation temporarily, especially with something like fuel that can go up dramatically, and then this can pull the CPI in one way or the other. So some economists like to use core inflation instead of the full CPI. So let's take a look at both of these through the report that just came out. Here is the report itself. Let me go ahead and zoom in a little bit here. So the Consumer Price Index for all urban consumers increased 0.5% in July on a seasonally adjusted basis after rising 0.9% in June. So we are dramatically lower than June, which is a trend. We can't really call it a trend quite yet, but it's a direction that we want to see this going. It's not a trend because it's only been 1 month. By next month, maybe we can kind of start piecing the dots together. If we see it even lower, that would be amazing. But still, over the last 12 months, all the items on the index increased 5.4% before seasonal adjustment, which is the same 12-month basis as last month. So it's still high. All in all, it's still high. So with this, the food index increased 0.7% in July, so higher than average for food. The food away from home index increased 0.8%, so even higher than that. The energy index was double that at 1.6% increase in July, as gasoline increased 2.4%. Now the index, less food items and less energy, so this is the core inflation, is 4.3% over the last 12 months. So excluding those more volatile areas is 4.3%, still much higher than where we want this to be for long term. For long term, we want this to be around 2%. Over the last decade or so, it's been under 2%. And we might see around like 3.5% for the next couple of years, some large banks are saying, but I mean, no one knows for sure. We don't know for sure. Here's a chart of the CPI increase for each month over the last 12 months. And you see we had this 0.5% in July of last year, so the exact same in July of last year, and then it ramped down to October where it was just 0.1%, and then that thing just ramped on up. We thought we were in the safe zone here in May, and then we had the worst month of them all last month, and that's when everything lit on fire and everyone was going out burning cars, or actually not really burning cars because they're too darn expensive to burn at this point in time. You can't go out burning used cars. They've gone up like 40% in value. And then we dropped down to 0.5%, but we still have that 12-month basis that's very high. So we're not in the clear quite yet, but this is at least the direction we want to be headed. If we saw, next month at around 0.3%, that would be amazing. I don't know exactly what's going to happen by next month. So I highlighted some of the areas here that stood out to me most. Food, you can see this. What I found interesting here is this is basically ramped up every month we have on this chart, and that's not good. Energy, same thing here. In January, up 3.5%, 3.9%, 5%, down a little bit, flat, up, and the unadjusted here is 23% in the last 7 months. New vehicle prices actually went up this month dramatically to 1.7%. Used cars and trucks, though, had the opposite. So with used cars and trucks, we saw crazy price increases here. 10% this month, 7%, 10.5%, and then just an increase of 0.2% in the last month. So it seems like used cars and trucks they kind of saw the tipping point here where, maybe it just didn't make sense to go up dramatically. If you increase something by 10%, it takes even more to increase an additional 10%. And we saw that basically back to back here for 3 months. So it'll be really interesting to see what happens next month with this once August's release comes out. So this is for July, this data. Shelter data was actually one of the lower on the list. However, there's some complaints about how housing is calculated into CPI, and it doesn't actually reflect the increase in housing prices because it's based on a survey to homeowners. So that one I take a little bit with a grain of salt. There's people who just don't like CPI in general, but we got to use the data that we have. Transportation services actually went down last month, 1.1%. And there's a few other things in here that I found particularly interesting that I just wanted to point out. If we scroll down a whole lot to this chart, energy services, gasoline, the price for gasoline over the last 12 months has increased 41.8% in the last 12 months. Utility gas has increased 19%. Used cars and trucks, not a huge surprise because they've gone up like crazy, but 41%. It blows my mind that there's people who have bought a new car, held it for 2 years, and then are selling it for the same price or more than what they bought it for. It's just so against logic when it's like, it goes against the classic saying, like, oh, you drive it off the lot, it loses half its value, whatever. It literally, that hasn't happened anymore. It's just so mind-blowing to me. Airline fares up 19%. That was not a huge surprise to me. That actually went down, though, in the last month. Maybe due to the Delta variant, maybe people a little bit more concerned about travel, maybe slightly less travel. I'm not sure exactly what that could be. The bacon index, I had to bring up the bacon index. Bacon is actually up 11.1% in the last 12 months. This is down from last month. Last month, the trailing 12 months was 13.3%, I believe. So bacon's maybe leveling off a little bit, but it's still expensive. And as a bacon consumer myself, I don't want to pay more for my bacon. Daily chores. There was a couple more things that I highlighted here. Snacks. Snacks are down. It's never been a better time to buy snacks. Down 1.8% in the last year. I was surprised to see that food in general has gone up dramatically, but snacks are down. Condiments down. Great time to buy condiments. Same with window coverings. Best time ever to buy window coverings, down 3.7%. Dishes and flatware, same deal, down 1.1%. So if you need some dishes or flatware, now might be the time to log into Amazon and buy some dishes. Men's pants and shorts up 11.2%. So if you're planning on buying shorts, maybe hold off. That one was a little bit surprising to me that it's jumped up so much. Now, I also do need to mention something. If you want to battle inflation, you can battle inflation by getting some free cash, some free stocks. Webull. They changed their offer. It's at least for the month of August, so I would do it sooner than later because I don't know if this offer is going to last longer than August. But a $5 deposit into your Webull stock brokerage or into a Webull stock brokerage, I have a link down in the description, will give you 2 free stocks. So you open an account, you get 1 free stock. You don't have to deposit anything. Then you deposit $5, you get a second free stock. So it's, battle inflation. Free stocks. Deposit $5. You don't even have to spend the $5. You can take it back. You get free stocks as a 100% return on your investment. So go ahead and check that out. Linked in the description. But something that's really important is relating how the increase in prices relates to the increase in wages. So we have here on EPI.org the increase in wages over time. So we have all non-farm employees here and then production and non-supervisory workers here. And then each of these numbers is the increase in the last 12 months. So here we have March 2007. This is the increase in wages between March 2006 and March 2007. So if we scroll down here to current day, we can see the increase for all non-farm employees is 3.98% over the last 12 months in wages, in average wages. Now, what's concerning here is CPI is up 5.4%. So there's a difference of about 1.4% where the average worker now has less buying power relative to the prices of the average goods and services that they're paying. Because remember, CPI are the things that you would purchase on a daily basis. It's a basket of goods that your average consumer purchases. We do not want this to trend in this direction because it just divides that wealth gap. It causes more inequality. It causes more issues in the long run. So they're saying that inflation is transitory. We'll see how the Fed reacts to this latest update in data. But my guess is they're going to still say, hey, we're just going to hold off longer, see how things pan out. We believe that this is transitory. We are not going to raise rates for X amount of months or years, which they basically have been saying over report of pretty scary numbers, if you ask me. Now, my biggest concern here isn't so much for people with money, with assets, because assets will tend to increase in value. If you own real estate before all this inflation, you're doing pretty good. If you own commodities before all this, you're doing pretty good. If you own stocks, you might be hit a little bit because the companies that you're buying into, they have now higher input costs. But if you're buying especially good companies, inflation doesn't really matter that much because great companies can increase their prices faster than their competitors and things end up being okay. I actually have a video on that you absolutely should watch. I'll pin it above on how anyone can fight inflation, both either in their investments or just in their personal life. It's Warren Buffett's advice on it. It's a really good video. You got to give that some love. It's pinned above. So I'm not so much worried about people who own assets. I'm worried about the workers and the people who don't own assets and they see this division of wage and prices. That's the huge concern here, and that's really why we don't want this to keep on growing. We really want this to shrink right back down to around 2%. But, there's been so much spending, you have to expect some of these effects. And it seems like everyone, including the Fed and the Treasury, are just kind of sitting there, fingers crossed, like hopefully this grand experiment works out. So that's the data for now. Feel free to leave some questions down below if you're curious on anything about CPI. And I would just like to thank you for watching and hope you have a profitable day.